For the promotion of private enterprises as projected, and Nigeria is poised to move from macroeconomic stabilization to a phase of growth in 2026. Now, this is according to the latest report titled Review of Nigeria's Economy in 2025 and Outlook for 2026. The CPPE projects GDP growth between 4% to 4.5% in 2026, supported by moderating inflation, stronger non-oil sector performance. In the report, Dr. Muda Yusuf, the CEO of CPPE, said reforms implemented in 2025 laid a solid foundation for stability, while exchange rate predictability, easing inflation, and improved investor confidence. The report further states that the year 2025 marked a turning point in Nigeria's economic trajectory. The naira traded largely within the 1,400 to 1,500 naira to dollar band, with periodic appreciations boosting business confidence and easing imported inflation. Inflation slowed sharply from 24.48% in January to 14.45% in November, aided by currency stability and improved supply conditions. Consumer sentiments strengthened as several food items and imported goods recorded outright price declines. Well, my guest is Mr. Otega Ogra. He's a senior special assistant on digital economy, digital and new media, I beg your pardon, to the President of the Federal Republic of Nigeria, Mr. Otega Ogra. Thank you so much. He joins me from Abuja. Good afternoon and compliments of the season to you, Mr. Ogra.
Compliments of the season to you, Tolu, and compliments of the season to all Nigerians. Good afternoon.
Yes. I think I should start by asking you, because many analysts in recent times say that there seems to be a shift, that we've gotten to the turning point where the economy now starts to bounce back to normal. We've seen projections of 4 to 4.5% growth for 2026. What's your overview of this? What are your own expectations?
So thank you very much, Tolu. I've also had some people use the word boom, but I'll be very careful when using that word. What we're entering is the recovery phase. A lot of the fundamentals are right. It shows that the work that President Bola Ahmed Tinubu and his team are doing, they've put us on the right track. We're entering a recovery phase with significant, upside as the case may be. Macroeconomic stability is recovering. Investor confidence is returning. I'm really waiting to see this year's balance of trade and balance of payments reports from CBN. Hopefully, when it comes, we'll see it will further give strength to the work we're doing. Domestic production incentives are very clear. The Nigerian First policy is there. It means today you don't need to know anyone before you can get something done or you can procure from government. Public procurements, acts are being followed to the letter. You've seen a lot of changes happen there. And gas and energy reforms, all the presidential executive orders that have been signed have really helped a lot, from regulation to the upstream and downstream sector. We've seen over $20 billion in investments, FIDs, coming on stream. And agriculture is always, which is a big driver of inflation. Our food supply, it's highly stabilized due to a lot of the things that were done in the last 2 years. So I think for me, I'm happy for where we are. Many people didn't believe we'll get to this point at this time of the year, or at this time in the administration's life, but it happened, and we thank God for that.
Now, that argument is there that we must sustain these reforms if we are to get to where we should be. So my next question to you would be, how, with your assessment, what do you make of sustaining these reforms? Do you see government staying firm with regards to all of the fallouts of these reforms that has been instituted since 2023?
One thing I would like to give credit to His Excellency President Bola Ahmed Tinubu for is staying focused and not being distracted all through what he's been doing with regards to the economy. An economy that was in a dire situation like ours as of 2023, that was not going to be built on fundamentals, would have collapsed very quickly. President Bola Ahmed Tinubu, focused on building the fundamentals first, and continues to strengthen institutions, strengthen regulatory authorities across all spreads of the economy. And we are seeing the results of that today. Rent seeking, which was something that had bedeviled this country for how many years, for decades, is hardly something that you hear about. The foreign exchange markets has been stabilized, across the industries, across small businesses. You're seeing people, thanking God, because sometimes stability is more important than, lower exchange rates and the likes. So it's very important that we continue to stay focused on the reform trajectory that we're going. And if you know Mr. President Bola Ahmed Tinubu very well, he's not one to be easily distracted by, naysayers or anything. And to add to that, January 1st next year, 2026, in a couple of days' time, Nigerians will be experiencing or getting one of the largest tax cuts, ever experienced in Africa. And I think that's something that business owners, low-income earners should be very happy about, because it removes a lot of the tax burdens from them, as well in the previous law that's been repealed, and moves a lot of money and income back into their hands.
Well, a step further, because many would say that as we move on, there are geopolitical concerns that we should also consider while we move on. That's not talking about the larger economy. But before I go there, let's stay with some specifics now. Part of it is the issue of insecurity, and it has to do with agriculture. Many expect that if we have a better environment, then our farmers will be able to go to the farms, will be able to, of course, get prices of foodstuff cheaper. So I'd like to ask you, what efforts are we making directly in that area of agriculture? And because many will tell you, yes, inflation is down, but they will still argue that the market and the price is, in some cases, still remains high. How do we balance this up?
Tolu, I don't know when last you went to the markets, and I don't mean the large retail stores, who many of them still mark up the prices, arbitrarily. Across different food baskets, if you look at the NBS reports, you'll see that the price of food has come down significantly. As insecurity improved, yes, there's still room, for improvements. Of course, there's room for improvement. But if you look at the data, out of about 4 million IDPs, especially in the north where most of our food comes from, you have over 2.9 million IDPs returning home. The only reason they're able to return home is because the security situation has improved in those areas. The government will continue to do what it can do to ensure that we wipe off all these terrorists on the face of the earth, or arrest them and charge them to courts and put them in jail where they belong. But until then, we'll continue to support those who are in those areas to be able to go back to their homes, to be able to farm, and to continue to provide incentives, agricultural extension services, better seedlings, and other things that the agri sector needs, to thrive. And I think that's the path that we're on.
We already have a new budget now for 2026, about 58 trillion, around about that. But that really is not where I'm focused on. I'm looking at the assumptions and the targets, what you make of them. $64 to a barrel of crude. Some say that's conservative enough. 1,400 naira to $1. Well, even CPPE alluded to that. There's been stability in that space. So we think that is also fair enough. Oil production for 1.8 million barrels per day, considering what Dangote refinery will be needing and all of that. Well, but my question really is, what do you make of that spending plan, considering what we've seen before now?
I think it's pretty conservative. And what it also tells us is that the government is becoming more realistic. We hardly see that when government budgets are done across the world. But we actually now want to match income with expenditure and cut the deficit as much as we can. Oil prices, the oil prices, yes, that's a very conservative estimate. We're also looking at improvements in the non-oil sector. They did pretty well this year. Revenues of over 411% increase as at this time, 2023. In terms of crude production and outputs, that's within range for what we are currently seeing, from our current crude production and outputs. So I think that can be sustained. In terms of the FX rates, 1.4, pretty good. It's been hovering between 1.4 and 1.5 for the last couple of months. And I think that's something that we can budget on. So yes, we'll be looking at, like the president has always said, expanding the tax net. but also ensuring that those are the lowest rungs of the society. The low income earners do not have to pay as much taxes as they could pay, as they would need to pay. So that was also more money into government coffers, but not by taxing the poor. It's by ensuring that tax is equitable, tax is fair, and that there's much more money to stabilize the economy from people's pockets. So when you have a lot of savings, because you have things like the students' loan going on, you don't have to pay school fees. You have limited taxes which are graduated depending on how much you earn. It simply means that you have more disposable income in your family or in your community, and that comes back into the economy, and we'll begin to see, a much more expanded economy for Nigeria in 2026 and 2027.
Well, subnationals, of course, recorded relatively stronger fiscal outcomes. You will agree with me. According to reports, states benefited from improved liquidity, stronger internally generated revenue, and, better performance, of course, when it has to do with funding and all of it. What are your expectations to complement what is happening at the center?
If one thing that President Bola Ahmed Tinubu, is someone who has always prayed fiscal federalism, and he has shown that in many ways, during his administration. States and local governments do not have any excuses anymore. They need to start, delivering the benefits of all these improved earnings and revenues that they're getting back to the people. I would love to see a lot more collaboration between states. Let states band together, regardless of regions. I mean, you could be a southern northwest state and a northern, southwest state, coming together and seeing, okay, what area of comparative advantage do we have over other regions or other states around us? Let's collaborate. You're seeing that with Lagos, and some northern states. You're seeing that with Akwa Ibom, putting real estate investments in other states. You're seeing a lot such collaborations, but I expect that we'll expand on it. The new power law, for instance, the new Electricity Act, gives states a lot of, leverage and power to now, start to regulate their own power sector. Power is very critical to industrialization. Power is very critical to economic development. I would love to see a lot of states, start to invest more of their time, more of their energies, and more of their resources into guaranteeing better power for the citizens of their state. If the states should thrive, the federation naturally thrives. So would expect to see a lot more from them. They're doing better, they're doing well, but they can do a lot better.
Indeed, they can do a lot better. Now, the outlook anticipates stabilization to growth. You alluded to that in your first response, supported by continued inflation, moderation, exchange rate stability, stronger performance of the non-oil economy. But when we look at all of this, some will still tell you that there's still some risk moving forward. So now, what are your own projections? Let me put it that way, your outlook in generality for 2026. Now, considering the fact that it is a pre-election year, that's where my worry is. We've already started hearing that politicking should start from January. If that happens, are you sure we are not going to put economic issues on the other side?
So politics is politics. But let's not confuse politics with governance. They are two different things. The administration of President Bola Ahmed Tinubu will continue to govern. And when the time comes for politics, they will do the politicking. But for now, governance is priority, ensuring that Nigerians get the dividends of democracy, which we've had, consistently for the past 26 years, 25 years plus. It's very important that we stay the course. It's very important that we do not get distracted from the business of governance. And like I said earlier, President Bola Ahmed Tinubu is very, very intense, without any distractions, on delivering the renewed agenda to the people of Nigeria. I expect the Nigerians to begin to be proud of what we've achieved so far. The outlook was very dire in 2023. Nobody expected, like I said earlier, nobody expected I would be where we are today. But that we're here is, something that we should all be very proud about. We're beginning to get back to our place of pride in the Committee of Nations. A lot of countries respect us more. We're seeing a lot of countries opening up to Nigerian goods. standards of Nigerian goods are improving. Like I am right now, I'm wearing purely made by a Nigerian. My suit and even my tie, made by a Nigerian. So we're beginning to see those things. And I still see some people complain about the high exchange rate, but my response to them is always, in a period like this, start to produce for export. Have a substantial part of your production, whatever you're doing, there at the export market. That's where you can earn a lot of foreign exchange and use it to improve your business, use it to improve the lives of people around you. And, Nigeria also earns more effects, alongside that. Businesses that have already done that, you can see what their numbers are showing. You can look at the Nigerian Stock Exchange, the Nigerian Exchange, and see what the numbers are showing. It shows that, see, not every tough situation, as the case may be, is negative. Sometimes it's an opportunity in disguise. Business owners have to be smarter. Business owners have to start upscaling their products, have to start meeting global standards so that they can, earn more effects, earn more income, earn more revenues, and, do better for themselves and the country as a whole.
Finally, before I let you go, okay, go ahead. Make your point, please.
No, I said, so like I said earlier, politics is politics. Governance is not politics.
It's not politics.
For the moment, it's focused on governance.
All right, then we'll look at all of this. Now, finally, for me, again, back to the business world. I'm always interested in the Naira and Kobo. Yeah. When we see declining inflation and our GDP stabilizes, gets better than what it is at the moment, many would expect that the central bank will put a hold or, try to ease rates a bit, because that high interest rates would not help the real sector. And that's been the complaint of manufacturers and others. As much as they see inflation declining, they are also bothered about the cost of borrowing. So do you think that at that point, the next MPC meeting is in February, I know, but what do you anticipate at that gathering, that table? What do you think will form discussions around that table in February?
So I'll start by saying this. I'm very comfortable with the way the central bank governor, has done his work so far. It's one thing to reduce rates and pour money to the economy. It's another thing for the economy to be stable enough to, to absorb all that without causing further inflation. So far, they've done so very well. And we're seeing a lot more, better interworking relationship between the fiscal side and the monetary side. I see the meetings, I see the outcomes of those meetings. So I think we should wait. They have all the data, they see what they see, they know where the economy is going, they know what is best in Nigeria. But if the president has full confidence in the central bank to do his job, I think we should stay open and see what they do in February.
All right, then, let's see how that plays. I must thank you so much for your time. And again, compliments of the season. Wishing you a happy new year in advance. Mr. Otega Ogra is Senior Special Assistant on Digital New Media to President Bola Ahmed Tinubu. Thank you so very much again.
Thank you very much, Tolu. Thank you for having me.
Have
a wonderful new year.
All right, then. Well, staying with this development, we'll still understand the state of Nigeria's economy projections